It was another impressive day on Wall Street. In fact, with the little surge we had right into the close, we did finish up over 1% for the S&P 500, which was one of three major indices hitting new all-time highs, along with the NASDAQ composite and also the Russell 2000. So wonderful day. We've got a big employment number coming out tomorrow morning, so we'll see how that goes. We'll talk about all that to see how it will affect our posture here this evening. And then I want to show you a trade application example of a stock that kind of hugs the line between financial and healthcare. It's actually headquartered right down the street from where I live. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 4th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ, and I would encourage you to follow me if you're not doing so already. We also appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in front of you. All right, let's jump into the activity here. And as you can see, I've got chart 6D pulled up here once again. Remember on Tuesday, we had the good pleasure of having a 1% up day as well right there. And then here we are yet again with that green bar up and over the blue line. So as I mentioned on Tuesday, we've had a little bit of a string of kind of more volatile days here recently. Nowhere near what we experienced back here in March of last year. But I think most of us recognize that was a bit of an anomaly back then. It's not something that you should assume you'll see on a once per year basis or anything along those lines. So this has been a little bit more aggressive trading that we've seen here recently. And fortunately, it has generally favored the bulls. You know, we had a couple of those candles where, you know, the craziness in the GameStop and the Reddit community caused a little bit of a sell-off. And speaking of which, some of you might have seen GameStop was down another 30-some% today. I think it was a $50 stock the last I checked. And remember, it was just a $400 stock here just a couple of days back. So anyway, easy come, easy go for that particular company. But it seems like the enthusiasm around those types of trades are kind of slowing down, and money is now finding its way back into more substantial profit-making organizations, and you are finding some benefits there. And so new all-time high, as I mentioned before, on the S&P 500. Our new level is 38.72, and we basically closed pretty much at the high here today, which is again a very impressive thing to say, especially since if you look at the daily candle. I don't know if I could come over here real quick here on the trade tab. I want to show you this right here. We had this nice little ramp right here going into the close. So this kind of gray area is the after hours activity. Of course, not much going on there for SPX since it's a cash index, but you can see that ramp right into the close. The last 5 minutes was a really impressive move there, and we closed nearly at the high of the session. We have had some interesting developments after hours, as we tend to do this time of year with all of the earnings announcements that are coming out. Some hits and some misses. A couple of them that affect my class's portfolio, my Monday top-down trend trading class. First, on the negative side of the equation, Peloton is getting hit after hours here today. Now, the good news is it was up $10 per share during the normal session here today, so it's giving all of that back in the after hours. So in other words, it's kind of a wash. You basically saw a stock that went up a whole bunch in the normal hours and then gave it all back in the after hours. So not overly concerning if you kind of think about it from that perspective. It's still a stock that's in a significant upswing here over the past year. And then another one that we own in my Monday class, which has much greater movements after hours, is Activision Blizzard. This stock is absolutely ripping higher right now. It closed at about $93 for the normal session, and it's trading currently above 103, so it's up more than $10 per share. So this will likely be one of the biggest movers tomorrow morning when I put together that 9 at 9 graphic like I always do. Of course, assuming there's not some sort of a bombshell in the conference call or something along those lines that we don't know of. But at this moment in time, it looks really, really good for Activision Blizzard. And it's kind of a similar story to what I'd mentioned to you guys the last time around, where we've had a handful of those kind of technology-oriented companies. Technically, this is a communications company, but Microsoft and then Google and now Activision Blizzard, all of those I would kind of put in the same camp. We have 25 actively traded stocks in that particular momentum-based top-down trend trading class. And, those three are 3 out of those 25 stocks that we own. And they all kind of felt the same way to me in the last, let's call it 4 months or so, which is they didn't really fall. We didn't have an excuse to really kick them out of our portfolio. They just really weren't keeping up with some of the more exciting names that we had in our portfolio. So it's really, I'm enthusiastic to see how they are reacting to their earnings reports here, because it gives them a shot in the arm, a little bit of an adrenaline push higher once again, and this should be an all-time high printing for Activision Blizzard as soon as tomorrow morning. All right, let's go ahead and take a look at our normal 4 grid now, and this will be chart 4B. And as you can see, this is what I was mentioning in the intro, 3 out of our 4 indices did hit all-time highs today. So there's the S&P 500 up 1.09% to a new all-time high. There's the NASDAQ Composite, which was up 1.23% today to an all-time high. And then the big daddy of them all right here, the Russell 2000 was up almost 2% today. So that was the day's biggest winner, and it also put in a new all-time high and basically closed at the new all-time high as well. For those of you that are part of my Wednesday factor-based swing trading class, this should make sense to you given what I worked with you on yesterday. To catch everybody else up to speed, let's pop on over to the internet here briefly, and let me pull up our factor selector tool real quick just to make sure everybody else is on board with this idea and this understanding. The factor selector gets updated for my class typically on Tuesday night is when I gather the information, that I posted it on Wednesday morning. But anyway, what we learned this time around was that after taking 1 week off, the low size category was right back into the driver's seat there, so to speak. And so no surprise that low size was our leading index here today as well, with the Russell 2000 surging nearly 2%. So again, if you like the idea of kind of thinking about the markets from a factor perspective, join my Wednesday morning class. If you like thinking about the markets from a sector perspective, then you'd want to join my my Monday morning class. While I'm over here on the internet, I always like to get a chance to say thank you to those of you that are helping support the Market Outlook on social media, particularly on Twitter. As you guys know, I'm always striving to get at least triple digits in terms of likes. And, by golly, I think we had the exact same 109 people that clicked like for me the time before. If I'm not mistaken, I'm pretty sure when I was with you on Tuesday, I said thank you to 109 people. And maybe every single one of you 109 did it again. And, it wasn't too hard, was it? I think you guys can handle it. It only takes 5 seconds, and it goes a long way for us. Some of you might wonder, well, do you guys even notice that we're doing that? Absolutely. In fact, I always like to get a chance to say thank you to Marita and Fred and Pam and Serene and Stephen and Ram and Gerald and Paul, and there's tons of great scholars that we see through our notifications that come in here and click like for us. So keep up the great effort there. Remember, as long as we're above 100 likes when we do these videos, I'm not going to question the time that goes into producing the videos. We start getting less than 100 likes, then I might start questioning that. So it's kind of one of those situations where it's to your own benefit to continue to click like, and it only takes you 5 seconds to do it. So thank you, as always. You guys are amazing. Also, while we're over here, quick heads up that I taught my question and answer session earlier today. Had some great questions, as we always do. Talked about one of my favorite books, Dividends Still Don't Lie, and some of the changes in yields throughout history, dating back to the 50s and the 60s. And so if you're interested in my conversation on that, feel free to check that out. Had another question about using the 5 green arrows system, why we use daily candles versus weekly or vice versa, and kind of taking you back through the journey of my time with my prior company and the things that I learned along the way there. So we had an excellent discussion. It was about 40 minutes that started at the 33-minute mark here about that process and how we can think about trend trading and how do we find those stocks like Activision Blizzard ahead of time. So if you're interested in that, check that out if you're a premium member. Had a question about Microsoft and San Jose Water. Had a question about Lucid Motors, one of the kind of up and coming EV companies. Had a question about U.S. Steel, and had a question about Vodafone. So lots of great stuff as always. If you're interested in that commentary, feel free to check out the recording. David did teach his portfolio management with ETFs class earlier today as well, so make sure you're checking that out. And then tomorrow morning he'll be teaching his technical analysis class, so it should be a great class as always there as well. Another quick little heads up, the other day, I think it was actually last night, I put together the dividend growth investing post here for all the increases from January. There are over 70 stocks that raised their dividends in January. So many of you know that's a favorite topic of mine. Some of you might have seen me tweeting about Gilead here just after hours, and they raised their dividend. But anyway, these 70 plus companies raised their dividends, and you're welcome to check out the post there. Remember, there are some areas of our website that are available for free for everybody. The dividend growth investing post is one of them. So if you just come up here to the blog area, hover your mouse over it, and then click on dividend growth investing, whether you're a paying member of our site or not, you would have access to that particular content. So check that out in your free time if you're interested in seeing all those companies and what their different amounts were that they were raising their dividends last month. All right, let's get back to some of our more traditional think or swim charts now. So long story short, it was a very promising day for all four of our indices. We have bullish, in fact, strongly bullish postures on all four of our indices again. And remember, that is a change from when we were looking at this on Tuesday. Now, you will recall that on Tuesday I said that while the posture was considered weakly bearish, I personally wouldn't read too much into that as long as prices were still above a rising moving average. Now, a day like today goes to show you exactly why I said something like that, because the path of least resistance was still to the upside. And while we had a little bit of a rough patch at the end of January, it didn't really break the trend in most of these indices. The Russell 2000 and the NASDAQ were the two that I pointed out in particular on Tuesday, saying that those look very strong to me, and so I'm not surprised myself to see them both hitting all-time highs today. And the S&P 500 is doing its best to catch up. Notice the intermediate line on the NASDAQ is above 80, meaning it's in the upper reversal zone again, as is the Russell 2000. The S&P 500's green line is not quite to 80, it's at 71, but it's moving up at a healthy pace, and it really helps when you get that all-time high. Whereas the Dow Jones continues to be our laggard. It does now have that dark green background color, telling us that we have a strongly bullish posture once again, because the intermediate line is above 50 and rising, but just barely. Notice the difference in the placement of that green line versus the other three charts. This is the one that continues to be the laggard, and again, that makes sense. This was the only one of the four not to hit a new all-time high here today. All right, let's go ahead and take a look at our three green arrows chart now. And this will be chart 4D. So as we're pulling this up, we do have a couple of charts on the board that now have three green arrows, and that is the S&P 500 and the NASDAQ Composite. Both of them occurred as of today, so this is fresh information. In both of the cases, it was the MACD histogram that was kind of the remaining green arrow that we were looking to pop into our system there. So both of them are getting their momentum back and now have that light green background color telling us that there's a good place to be trend trading in this environment if you're looking for the types of stocks that you would compare to the S&P 500 and the NASDAQ. And I would throw Russell 2000 in there as well. Technically, you don't have a three green arrow signal on this yet, but that's probably going to happen tomorrow. As long as we don't have some sort of a major market meltdown off of that employment report in the morning, I would assume that we'll probably end up seeing three green arrows starting tomorrow on the Russell 2000. The Dow Jones got a little bit more work to do. You might not see that tomorrow. You can see there's a lot more separation on the MACD histogram before you get to the zero line compared to the Russell 2000, which is basically sitting right on the zero line right now. So we might not get 3 green arrows on the Dow Jones tomorrow. But if there is another, let's call it 1.5 or 2% up day or something like that, it is possible for even the Dow to get up there. So we'll keep our eye on it. But point is, things are looking rosier today than they were a week ago. This has been a really, really impressive rally this first week of February. So those of you that have stayed bullish along the way, assuming you're not in stocks like GameStop, then I think you're probably fairly pleased with the market activity so far this week. All right, let's go ahead and do a little bit of 12 grid analysis now. I'm going to come over here first to talk about 5A, which is our asset class 12 grid. And even this looks a little brighter than it did here the last few times I was doing the presentation. We've kind of gotten used to seeing a bit more pink on the charts. Now all of a sudden we're back to green, and green is generally a good color for those of you that are on the long side of the equation. We do have 3 red charts left, and those are going to be your long-term U.S. Treasuries, your foreign bonds, and your gold. Now keep in mind, all 3 of them share a common attribute here today, and that is all 3 of them have had 2 straight oversold cluster signals. Take a look at these little green dots showing up on all 3 of those charts right there. Now you'll recall that when I was doing this video here maybe about a month or so ago, I pointed out this other oversold cluster signal for you on the long-term U.S. Treasuries chart, and this is TLT. And I said, I'm not expecting any sort of a change in trend at this point, but I would not be surprised at all to see a reversion to the mean. In fact, we had this conversation earlier in class today with that U.S. Steel conversation. But anyway, that's exactly what happened. We had this reversion to the mean move coming right up to that downtrending 30-day moving average, and then it rolled over again. So had a mini reversion to the mean move, but it did not change the trend. And that's kind of where my head's at again, until I'm proven otherwise, right? And there will be plenty of times where that happens, but until then you have to operate with a set of assumptions. So my assumptions right now is that we might very well have a quick little snapback rally in TLT in one of these upcoming sessions. Who knows, maybe as early as tomorrow. But until proven otherwise, I'm going to assume that the downtrend in bond prices remains in check, or in the same mode as it had been. And so the opposite of that also is true. In other words, when bond prices go down, interest rates tend to go up. And I'm going to assume, until proven otherwise, that we continue to see a rising interest rate environment, just like we saw here today with the yields going up once again and ending for the 10-year at least at 1.13%. So we have these 3 strongly bearish charts, but all of them are so strongly bearish that they're probably due for a little bit of a bounce here. So you've got to be a little bit more cautious there. Now, when I was with you on Tuesday, and I've mentioned this in prior weeks as well, I was mentioning that the longer this goes on, the more legitimate this reversal in the US dollar looks. I was pointing out that inverted head and shoulders pattern to you here during this YouTube video the last few times I've done it, and that continues to be the case, right? So the longer we talk about this, the longer it is legitimately reversing, and today was another proof in the pudding that is occurring. The dollar is rallying right now. We were up another 0.45%, which is a pretty strong day for the dollar. And as I mentioned on Tuesday, we already have some proof in the pudding that this is a legitimate move, in that the moving average itself has turned green, right? The last 3 months, it's mostly been a red moving average, and then started transitioning to yellow, and now in the last week, it has been green. And so is it going to go straight up from here? No, probably not. Most things don't. We're going to do a little bit of back and filling along the way, but right now, my assumption is that we probably are in a little bit of a stronger dollar environment, and that wouldn't have necessarily been the case of the way I was thinking a month ago. So That's the whole point of looking at charts. Your mind has to change once you start recognizing change. And right now, there is a change afoot there in the US dollar, which can impact things like foreign securities and commodities. And mentioned before, gold is one of our bearish looking charts right here. And so while crude oil hasn't necessarily been at a disadvantage with the strength in the US dollar, gold prices have. And so we'll keep our eye on that. But, what we saw today out of, let's say, the foreign markets makes sense as well, right? Come up here to the top, you look at EFA, the developed foreign stocks, it was only up 0.11% today. EEM, which tracks the emerging foreign stocks, was barely even up. It was up 0.04% today. Now, that's all fine and well. It's not like that's a breakdown or anything like that, but we're always comparing things, right? That's the whole point of technical analysis and trading one security for another. We have to make decisions by comparing one thing to another. And so in this conversation, we want to compare what's going on with the foreign stock market versus the United States. The U.S. was up over 1% today. That is a huge day for all intents and purposes. And at the same time, the major foreign benchmarks were basically break even today. And I think a big part of that story is what we're seeing with the U.S. dollar. The U.S. dollar is getting stronger, and therefore having foreign exposure is less interesting in that type of an environment. So we'll keep our eye on that story. Again, I don't want to, it's not a situation where we should all be rushing for the exits at once or anything, but we have seen a decided slowdown in some of these foreign markets here more recently. Bitcoin also, remains in an uptrend. You can see it was down 1.75% today, but that's pretty much a non-event for a security as volatile as Bitcoin. We remain above a rising moving average in that case. High yield bonds also look pretty strong. And like I've mentioned you guys countless times in the past, remember right now, high yield bonds are more tethered to oil prices than they are traditional government bond prices. So there is an opportunity for you to pick and choose amongst the various types of bonds, just like you have an opportunity to pick and choose amongst the various types of stocks. And if you have a feeling that the oil prices are going to continue to go higher in the future, that tends to bode well for the high yield bond market in this environment, as many of those corporations that were raising that high yield debt are going to be those oil companies that were on the brink here just a year or so ago. Let's go ahead and take a look at some sector analysis now. And as we pull that up, it's going to be chart 5C here. You can see that this picture brightened up as well. We had kind of gone through a little bit of a period there for maybe a week or two where we saw a little bit more pink showing up. But all of a sudden, we've got a lot of green here, and that's a good color for those of you that want to be long the market. The only two pink charts on the board are healthcare and staples. Now with healthcare, it's a light pink background color telling us that we have a weakly bearish posture, not a strongly bearish posture. And that makes sense. I still look at this chart on healthcare and I say, it's okay. It's not lighting the world on fire, but it's not breaking down in a big way either. That moving average continues to kind of push prices higher, even if they're not going up at as rapid of a rate as other sectors that are out there. So I'm not particularly concerned about healthcare at this moment in time. There's going to be some hits and some misses along the way, as there, typically is. I did notice that Amgen had a little bit of a struggle after their earnings announcement here earlier this week. But, then again, you have Gilead up tonight after hours and, everything else in between. So on the whole, I think healthcare is an okay place to be hanging out, just not as strong as some of the other areas. Staples is a little bit of a different story. Staples is more significantly bearish here, and that makes sense. You look at the background color, it's that dark pink background color telling us that we have a strongly bearish posture in this particular case. Now, the staples have had 4 straight up sessions here after putting in this oversold cluster signal. So we're getting our reversion to the mean move right here, somewhat similar to after getting this greened out over here, we had this reversion to the mean move. And so there is no guarantee this will turn into an uptrend, but we shouldn't be surprised that we're getting a little bit of levity to the consumer staples chart right now. So we're going to want to watch where it appears like it's topping out. If it comes up to this red line and starts rolling back over to the downside, then there might be a little bit more time in the penalty penalty box there. On the other hand, if we start establishing more time above that moving average, then there might be a legitimate opportunity for a reversal. And remember, it's not impossible for a security to do that. Real estate is a good example of that, case in point, right? Real estate did not look great at the beginning of January and then has had a really solid recovery here in the last 3 weeks. Now we're up here trading near the upper half of the range. Now the trend itself does not look strong, but a lot of times what happens is you go from kind of a downtrend into a transition period where you chop sideways, and then you have the opportunity to potentially move higher with a legitimate uptrend after that. So it's possible that's what we're seeing right now out of that real estate space. We'll keep our eye on that. Otherwise, it's a lot of the same olds once again, with some of the stronger charts. Technology, right? Tech was up 1.6% today. Remember when I did the trade application with you guys 2 days ago, it was on Apple. And I had no idea that the next day or so they were going to be in the news for developing their own autonomous electric vehicle with Hyundai. But, we were just reading the charts, and the charts were strong. And you're setting yourself up for success when news like that comes out, right? You got to be in it to win it. So this one is a strong trend still, and we still have good strength out of the communications as well. Discretionary is holding up reasonably well, although it's not quite to a high, so it's lagging tech and communications a little bit from that particular perspective. But we've got some good charts here on the board. We did have the financials rising over 2% today here as well, so a pretty strong move there, which does take us into our trade application example. And I mentioned that tonight's trade application was going to be a blend of financials and healthcare. This company is Health Equity. As I mentioned in the intro, it's actually a company that is headquartered like 2 miles down the street from where I live. I just drove past it yesterday, as a matter of fact. So some folks from our old company actually are employed by Health Equity. So hopefully they're doing well if you're listening to me out there. Anyway, we talked about this one in my question and answer session 1 week ago. So hello, Mike, if you're out there as well. Mike N, I think you asked me about it. And I said, you know what? I'm interested in it. I just want to see it settle in a little bit better, because he was asking me about it during this kind of period right here, and it just started rolling over. Now, we had a nice move in it prior to that, and we hit a high in that process. But then we had this rolling over effect, and I was mentioning to him a week ago that if this thing rolls over and starts establishing support around its rising moving average, I think it might end up being a pretty interesting opportunity there. And so lo and behold, here we are 1 week later, and that appears to be what's happening. Now, obviously, anything can come out of the blue and wreck your trade. But right now, I like the way that this is shaping up. You can see we closed near the high of the session. And remember, I've already done this trade, so this trade was done about a half an hour before the market closed, so we're already up a pretty decent amount on it. Remember, that's the benefit of you guys that are our premium members of Market Scholars. You get all this information before the market closes, so that way you can consider the trades for yourself. Everybody else that watches the free YouTube video can't place their trades until the next day. Sometimes that benefits them, sometimes it doesn't. But anyway, just a reminder that that's one of the key benefits of having a premium membership with us. Anyway, this is going to be a basic trade. It's not the largest company out there. Its ticker symbol is HQY. And while it does have options, it's just maybe not the most liquid company out there. So I just chose to do a straight stock trade with this, and it's just a basic swing trade setup where I'm hoping that we had this nice rally. It's remained above this rising moving average. We've rolled over. It looks like we're establishing a support area here, and I'm gunning for this area up here at around this level that I'm circling with my mouse. My stop loss is down at this area that I'm circling with my mouse. And again, if you need those specific numbers, check the Telegram app there. But I'm basically just playing the bounce. Notice that today is the day where we transitioned from the pink background to the blue background, meaning that we now have a bullish swing trading posture, hoping for a quick little bounce up off of today's move. We also have a little bit of a bullish near-term divergence signal taking place here. Notice that you have the valley number one right there in the blue line, right here where I'm circling on January 29th, and then valley number two is right here on the 3rd. Notice that valley number 2 is slightly higher than valley number 1. So in other words, higher low right there. Meanwhile, the two candles associated with that those two time periods is this candle right here and this candle right here. So we have lower highs on the price, higher lows on the underlying indicator. There's a divergence between those two things happening, and the hope is that the indicator is sniffing out more bullishness than price is telling us all by itself, and that will aid and assist this company to bounce higher. We'll see how it shakes out. But anyway, that's our trade application here for the day. I appreciate you checking out the video as always. Remember, if you want these videos to get done every day, I would encourage you to click like every day. It only takes you 5 seconds there on Twitter, and both David and I really do appreciate that. Good luck to the Buccaneers and to the Chiefs fans out there. It should be an enjoyable Super Bowl this weekend. I'm going to get my stock selector and our sector selector updated tomorrow night. David will be teaching his technical analysis class in the morning and should be doing the market outlook video at some point over the weekend as well. So anyway, hope you got some value out of checking it out tonight. Have a great weekend, and we'll see you all next time around. Take care, everybody. Bye-bye.